I think secondary market generally there are two effects. One effect is in most normal situation, there's always some funds who are expiring. They will be looking to create some liquidity. So that is a normal phenomenon that happen in normal market. The second effect is probably happen only in today's market. IPO market and exit market has been more or less shut for almost 18 months. Because of this, certain investors will need to have certain cash flow to fund maybe their pension requirement, or maybe their corporate development requirements, or many other initiatives. So some of this cash flow which they may be expected but did not happen, maybe will not happen for another 18 more months. So as a result of this, many more people are pressured to come out to sell some of this position. So recently, that's why you see a lot more discussion about secondary market. And because of the supply and demand, and as you know, when there's a lot of supply and the demand is lower, the discount will proportionally increase. So as a result, you heard about people talking about 40-50% discount for NAV. And I think this is going to continue for a while until the exit market maybe come back to a more normalized market, and then this maybe will stabilize. I think venture capital market, generally speaking, in 2023 is compared with 2022, maybe is much improved. Because 2022 we were coming out from this hyper valuation situation. People all FOMO phenomenal. People were all chasing deals. Suddenly there was a shock whereby public market valuation came out substantially, and then compounded early of the year we had the Silicon Valley Bank problem. So all these factors created a lot of concern. A lot of investors, venture capital investors, in the later stage especially, they will all pull back. And then early stage investor, although they are still active in the market, they are a lot more cautious in terms of choosing the right deal, the valuations, the deal size, and so on and so forth. Vertex Southeast Asia Fund have announced a final closing for far exceeded its target of 450. What gives a positive news, that's not for ourselves, but also for the industry generally. We know many of, unfortunately, our peers have been unable to raise the funds that they were trying to. This is a couple of things to take back and learn from this. Firstly is venture capital, although outsized return is important, distribution to paying capital is equally important. This is what is known as DPI. So one of the things that we have done well as the Vertex Southeast Asia and India and some other funds is that while we always look for outsized return, sometimes we also have to be disciplined to recognize at certain times we may be able to we must be considered some of the exit opportunity and trying to create proceed for distribution to our investors. So it's always a balance between holding on to a portfolio for too long or exiting too early. Sometimes people may say they're too early because you took money off the table too early. So that kind of discipline is always had to be there. I think in the good time, VC tends to hold on longer than what they hope. In the bad time like this, a lot of people have no choice but come out to sell secondary, and then as a result, they have to take a severe discount on their portfolio. So it reminds us that when there's good time and bad time, you must always be disciplined on investing and the discipline of creating exit and value and proceed to your investors. And DPI is equally important comparing IRR, portfolio value. Therefore, even in this very difficult environment, investors still prepare to commit capital, knowing that they are committing capital to the right team, who will continue to deploy capital in a disciplined manner, at the same time creating the right exit for them over time.